if we go back to this idea of the fixed money supply, there's part of me that I was trying to get my head around this idea that, like, okay, so there wouldn't be any, like, theoretically in a closed system with a fixed money supply, there wouldn't be growth of like dollar value of, or Milton's value in within the system. But that doesn't mean that, I think I was trying to, like, get my head around, like, in my mind there's a difference between, like, value and the monetary, like, nature of it, in that, like, so if we were to have the Bitcoiners, like the Bitcoin maximalist dream, that there would be a fixed money supply, and sort of the value of the Bitcoin would continually increase forever as, like, say, GDP, or like the value of all of the things that we created as a country grew, and therefore the Bitcoin, there'd be the same number of Bitcoins but way more value, so that the you would be able to get way more stuff for the same amount of Bitcoin. Like, am I like going about thinking about this the wrong way? Like, you could have value increase of the economy without there being, like, a quote unquote monetary numerical value of that increasing. Is that right?
That is exactly what people in Bitcoin believe, and it'll be interesting to see whether they manage to achieve their outcome. Because when you look at, again, looking at history and say, has an economy grown without an increase in its level of money? And the answer is no. If you look historically, they've got, as you know, I've shown you data, which I'm looking forward to showing in the podcast at some point as well.
Mm-hmm.
If you look back and look at the growth of the economies, they always grew when there's a growing amount of money. You very rarely had an economy growing with a shrinking amount of money. And in fact, a shrinking amount of money normally caused a economic crisis, a Great Depression of some description. So the standard thing has been, there's been an increasing amount of money and increasing real activity, and there's also been a bit of inflation. Okay? Now, what the Bitcoiners and the hard money people are saying, let's get rid of the inflation entirely. So a fixed price for everything and a fixed money supply, and we're going to get economic growth out of it. That has yet to be achieved on the planet. So unless there's magical powers to Bitcoin and so on, I don't think they're going to achieve their objective. And one thing they should be definitely trying to avoid, if they do want to achieve that, is any form of debt. Because if you borrow money and the money itself increases in value over time, you've got, if you borrow a Bitcoin now and it's worth, say, $20,000, and you've got to repay it in 5 years' time and it's worth $60,000, you're not going to be able to do it. So there are real dilemmas with a hard money supply, and people are trying to maintain the value of something, with the value in the monetary sense there, without looking at it in the entire system it's operating in. And I'd be terrified if I saw banks lending Bitcoin, because if you had to pay back on the current value of Bitcoin was being maintained, then you're not talking interest rate of 5 or 10%. You're talking 50, 100% levels like that. And it'll be good night Josephine if people find themselves having to repay that much money in debt terms. So you're talking about a system which would actually be ruling out debt. Now, I've got a lot of problems with debt. Okay, a lot of problems about how we've used it and how we let banks create too much of it. But that is in the order of magnitude different experiment that I would not like to be part of.
That's a really, really interesting thing that I have heard zero Bitcoiners ever mention about debt. That is, like, wow.
Yeah,
I
you're not
hadn't
going to
thought
want
of
to
it
lend
in
a
that
Bitcoin and
sense.
get
Yeah,
less
yeah,
than a
yeah.
Bitcoin back. Okay, so I mean, you might well say, lend a Bitcoin, pay me back a Bitcoin, and rely on the appreciation. But why should you not hang on to it yourself and let it appreciate in your own pocket? So if you want to lend it, you're going to want to get a higher rate of return than you get from the Bitcoin's own appreciation. Now, how's it going to happen? And then you suddenly the physical things you're selling have got to be increasing in value at the same time. You get caught in a few knots there. And I just don't think any of this has been thought through, because, again, people are starting from a set of myths about money to begin with, rather than a realistic understanding of what it was in the past and what it is now.
Wait, so you're telling me an internet-driven hype trade might not have all the facts right?
Oh, there's a slim possibility.
uh, I mean, I still find it to be a fascinating idea, and I am invested in the hype train because whilst I'm not 100% sure about like the actual physical realities, the idea is like I believe in the hype train to continue to drive it upwards for now. Um, anyway, and I also have a sort of a vague thought that it's a good place to at least put some money as some sort of inflation offset. But I mean, it hasn't really proven
That's
to.
what people are doing. They're
Yeah,
buying a physical asset, a non-financial asset, and hoping that'll maintain them. Like hope the non-financial asset will grow faster than the general price index, so they come out ahead.
yeah. Well, I mean, it hasn't proven that way over the last 2 years, but over the last 5 to 10, it has. So I think it sort of depends on your time scale as to how accurate that is or might be in the future. But I wanted to ask about inflation because we sort of like sketched around it a little bit. I want to start with this idea. So in a fixed money supply, like you said, we ideally for like ideal conditions for economic growth, you want at least a tiny bit of inflation or a tiny bit of like money creation in order to
Yeah.
yeah.
The money creation. If you, I mean, the if is whether you want a growing economy indefinitely. There are ecological issues there, which we may or may not get into in this discussion. But if you don't have any environmental constraints on economic growth, and you want economic growth, then historically you get that when you've got growth in the money supply, and often when you've got a bit of inflation occurring as well. Because one thing inflation does is it encourages you to spend. Now, if you have the opposite, where prices are falling, deflation, that encourages you to hang on to your money because the more slowly you spend it, the more it's worth. I think like you might be able to buy, say, a Bitcoin with a pizza with 100 Bitcoin, and if you wait, 10 years, you can buy a pizza shop with a Bitcoin. And so that reason, something which retains and increases its value over time is actually a discouragement for expenditure, where a bit of inflation means you've got that encouragement to spend. So when you look at the incredible physical growth in the physical resources we have, this again, people just aren't conscious of how much physically better off we are now than we were, say, 1.5 centuries ago in what we now call the advanced economies. You've probably heard of the name of one Karl Marx.
Yes. Who I didn't
Okay, well,
realize, but
Karl,
he's buried in North London, which is
that's right. And
hilarious. Like I didn't realize.
he was living in Chelsea, and he and his wife Jenny left Chelsea. I want to have a guess as to why they left Chelsea. Looking for better
Oh,
views,
I'm gonna. Well, I don't
property
know.
prices. It was a
Yeah,
cholera outbreak. Okay,
hilarious.
so England had a cholera outbreak at the time of Marx and Jenny, Karl and Jenny Marx. We're talking back in the 1850s and 60s. So the standard of living was so much lower then than it is now. Things we take for granted not existing, like cholera. Though the way you're going with the sewerage system in the UK, maybe it's going to make a comeback. Lucky you.
Yeah, that's
It
freedom.
was so much better off now. So that the amount of energy we consume is astronomical compared to what people consumed in our similar situation 100 years ago. So there's been a huge increase in the physical productivity of the system and the general living standard of individual people. I mean, even having a hot bath, okay, or a hot shower, that was unheard of 150, unless you're a millionaire 150 years ago. So we take these things for granted, but don't realize how much things have improved over that time. And all the people who want hard money are saying, "Oh, look at this terrible decline in value of the non-financial asset we use for transactions." I'd say, look at the financial asset used for transactions. Look at the increase in the non-financial assets we all have: houses, cars, computers, transport systems, airplanes, etc., etc. All this stuff occurred during that period. So if you're putting it down, put it down properly. Look at what the achievements were at the same time and ask yourself, do you think your monetary system can achieve the same?
Hey, listeners, real quick. Do you ever find yourself sitting watching the stock market like this? Well, now you could instead be ordering my book like this. It's the story of GameStop. You can purchase it with a hoodie, with acknowledgements, or just with the early backers edition. It's all about the GameStop story. It's the real story, not just what you've seen on films. It's exactly what has happened over the last 3.5 years. And with DFE back, I'm finally able to draw a conclusion to my book. Please pre-order it. It really helps me out, and you will get it eventually, I promise. Hopefully this year.